Hey all, welcome to ShareTreck. This is Raj here, friends. Good morning, and let's dive into today's morning live stream. I'm literally tongue-tied and speechless at what is happening, and I have my thoughts to share with you as always. I'm looking at the headlines before the bell. Airlines show surprising resilience amid consumer weakness, and we are seeing something almost, I would say, unbelievable in the markets this morning. Delta Airlines just posted robust second quarter results with net income up 63% from last year and revenue from premium products actually rising by 5%. Even their partnership with American Express saw a 10% boost. Despite cutting that 2025 profit outlook, Delta is projecting strong earnings for rest of the year. And the stock market is soaring pre-market. But here's the catch. This comes at a time when the broader consumer landscape looks shaky. Just look at Amazon Prime Day, which saw third-party data indicating a 41% dip in sales compared to last year's first day, a sign that consumers are tightening their belts and being much more selective with their spending. Now, if I was to say that, let us say, even if Amazon disputes the size of the drop, well, the fact remains the consumer is showing real signs of weakness, and that's echoed across other sectors. Even if you look at credit card debts and all, it's hard to reconcile these strong airline projections with the reality of a weak labor market and cautious consumers. Are these airline numbers sustainable? Or are we seeing a temporary blip fueled by a shrinking pool of premium spenders? Or could be that the big beautiful bill has given extra money to the top earners, and maybe they are doing the premium spending, and that is replacing actual consumer spending from the average class people. But my personal feeling, which I explained in my previous video as well, is that the Epstein files are continuing to dominate the news cycle, and Trump will do everything he can to distract with controversy. The Epstein file issue is raging in the MAGA circles as well. The Justice Department has concluded there is no evidence of a secret client list or blackmail, but that hasn't stopped the conspiracy theorists or the political firestorm from intensifying. The MAGA base is furious, and the story is far from over. And in what looks like a classic move to bury the headlines, Trump is rolling out a series of controversial economic measures. When I made the last video, we had a 50% tariff imposed on copper and then a proposed 200% on pharmaceutical. This is a huge blow to global supply chains and could drive up costs for everything from semiconductors to defense system. Because when you tax the core raw material, then all manufacturing costs go up. Prices are already surging, and the knock-on effects from the US manufacturing and global trade could be severe. But that didn't distract the people. Then right now, what he's doing is creating a looming credibility crisis at the Federal Reserve, because Trump is pushing to install a new Fed chair, one seen as likely to cut rates on his command. This has investors worried about the independence and reliability of the US central bank. The risk here isn't just policy uncertainty, but a fundamental erosion of trust in the US as a business-friendly environment. Now, I'm thinking that it would be much better if probably Trump created some controversy in the social and entertainment arena, because that is most likely to distract the MAGA from the Epstein controversy than doing these things in the business area. These moves are catastrophic for American business image. Tariffs, political interference with the Fed, and headline-chasing policy decisions all make US a less attractive and less reliable place to do business. So for retail investors, I mean, we need relief. Midterms can't come soon enough. As a retail investor, it feels like we are just along for the ride in this madness. The market is being whipsawed by headline risk, policy uncertainty, and political drama. Frankly, when we see a headline which traditionally should bring the markets down, we are seeing the opposite happens. So it's like up is down and down is up. We just can't have the midterm elections soon enough. Let's hope they bring much needed stability and sanity back to the markets. So this is my frame of mind when I start looking at the markets. So let me go in and have a look at where we are with the indices. So here we are looking at the indices, and let's get in there now. Yeah, so this is our chart for today. S&P 500, this is a daily chart. And as you can see, we are still below this diagonal line of resistance. And today, the resistance is going to be 6,320.25. Pre-market, we are just up 0.02%. So the market is still making up its mind. It has not pierced this diagonal line of resistance. It has touched the diagonal line of support out here at 6,283. So I'm going to mark this green, which is a support for today, failing which the 9-day exponential sitting at 6,262.92 is going to be the next level of support. Our divergence still exists on the bearish side. Same thing for NASDAQ as well. It's up 0.06%. Support is going to be the 9-day exponential at 22,000. What is it? 22,856 or something in that range. And yeah, 22,865. And the resistance is going to be somewhere around 23,200. Those are the two ranges. Our bearish divergence still remains. It has to take effect. It always does. It indicates something wrong with the market. So be very careful. That's my personal opinion again. Dollar index is finding support, very strong support at 97.30 along with the 9-day exponential moving average. And it's doing pretty okay. The sentiment has turned bullish. However, the momentum is pretty low. The interest is a bit lower out there. And if you look at the 10-year yields, they have gone up 0.004 basis points. They're at 4.34. And the 20-year is at 4.86. It's up 0.002 basis points. And 30 years is at 4.87. As long as they're away from the 5 percentage points, I think we are looking decent. We have this diagonal line of support, which is continuing to perform the role of a support. And for today, all the exponential moving averages from the short-term ones, from 9-day to the 50-day, they are all performing the role of a resistance out here. So it's going to be pretty strong resistance. And hopefully the yields stay low. That would allow money to remain in the stock market, or else it's all going to get into the bonds. Then we go on to the indicators, the way we left the indicators earlier. As you can see here, please mention in the comment section if you are able to see my cursor, and I'd be really happy to note that I could have solved the problem. Okay, so here we go. So S&P 500 index ended on the last trading day at around 6,263.25, up 0.61%. And I think for today, we are going to find support with this diagonal line of support somewhere around 6,260.57, failing which the 9-day exponential at 6,205 is going to be the support. And our resistance is going to be today at around 6,313.14. Of course, the bearish divergence still remains. Likewise for NASDAQ, the resistance, let me pull this across. The resistance is going to be at 23,020, and the support is the 9-day exponential at somewhere around 22,608. Now, VIX is down 0.56%. This is the most surprising thing, despite a whole lot of uncertainty created with the tariff letters and more countries being dinged with tariffs, and the copper tariffs and the proposed pharmaceutical tariffs of 200%. And especially the pharma tariff is very dangerous because there are things called as API or precursor for pharmaceuticals. They all come from China. And it's very difficult to set up a pharmaceutical industry domestically to produce domestic pharmacy to replace imported ones. So that's going to be a big one, especially for the pharma sector. None of that is registered in the VIX. The VIX is very, very calm. This is as calm as when we have a steady president and a steady economy and steady everything, no wars, nothing. The things go much more placid. So it's like that. So I'm really surprised what's happening out here. Gold, on the other hand, is going up 0.26%. continuing to ride this long-term diagonal line of support, and it has got support from the 50-day exponential, and it has a resistance from the 9-day and the 21-day exponential, both of which are sitting in the vicinity of around 3,329. Right now, we are at 3,321. And I think gold might start getting more traction in the days ahead as the uncertainties keep piling up. And we'll see more movement in the gold as the dollar becomes weaker. Right now, the dollar is still holding on to its value relative to its historic situation, and gold is still gaining a little bit more. So that could be some message out there. And QQQ is up 0.11%, indicating that pre-market, we have this diagonal line of support, which is going to give us a support somewhere around 556.03 today. Right now, pre-market, we are at 556.83. If we manage to break down below this, then the 9-day exponential is going to give us a support at around 550.40. So that's the state of play out here. Next, I would like to go into AI and have a look at NVDA. So when I look at NVDA, I see that we are up 0.90% in pre-market trades. I definitely regret having sold all my NVIDIA holdings, and I'm too afraid to get into it right now. But those of you who had the guts and courage to hold it, you have met our target, our cup and handle target of around 162.39, and see, we exceeded that, went up, and then came back down again. Now it could go either way because we have a bearish divergence out here. Let me mark the bearish divergence out here. So you have a bearish divergence going on. If I was to take this out and put it for the short period of time that we have out here, so we still have a bearish divergence, and this bearish divergence has got to materialize. And I'm afraid to get into NVIDIA at this time. You can call me a fraidy cat or whatever. My risk profile is very, very risk averse at this point of time, given my age. So I definitely miss this. Next, we have Meta, which is flat in pre-market trades, a support from the 9-day exponential, which is sitting at around 721.47, and resistance at 750.63. That is the story for Meta. And we are already seeing our bearish divergence come to fruit. And we have this diagonal line of resistance, which I have drawn on top of the price line, matching what we have here in the RSI and the MACD. So we are getting realigned as far as Meta is concerned. So I think the way is down. But another way of looking at this could be that we have formed a bullish pennant, and bullish pennants most of the times break out on the upside. We'll have to see if in this case we are breaking out on the downside, because if we break out on the upside, again, we'll have a divergence. Sorry about that, my friends. Then we have Google, which is down 0.05% in pre-market trades. I think Google has been very mistreated by the market. It has not been given the respect that it deserves. But still, it has got this huge line of support out here, this green line of support, which is going to provide support today at 175.74. And we also have the 21-day exponential sitting at around 175.03, this yellow line out here, which is giving it a lot of support. So I think between the 9-day exponential, this diagonal line of support, and the 21-day, Google has a whole lot of support. And even if it does fall, I don't think it's going to fall too much. The bad news that they have is antitrust trial that's going to take place with potential penalties for $100 billion. So that could be one of the things that is making the market a little sore about Google. But overall, I think the numbers are looking good on Google. Amazon is down 0.31% in pre-market trades. And it's in this kind of a wedge pattern out here with support from the 9-day exponential, which is sitting at 220.14, and this diagonal line of support, which is currently sitting at 221.34. Right now, pre-market, we are down 0.31% at 221.84. With regard to Amazon, we have news reports from third party saying that there is a drop of around 41% in first day sales for Amazon Prime. If that turns out to be true, and if the market believes that to be true, then we can look at breaking down below this bullish pennant and starting a move downwards. And in which case, the 21-day exponential moving average will be the next level of support that we might see there. So that possibility is definitely there. Bullish sentiment is waning, and MACD is almost ready to cross over to the bearish side. So that's what we have there. And Apple is down 0.44% in pre-market trades. And I'm thinking that if we look at the chart out here, we can see that we have a support from the 9-day exponential, which happens to be somewhere around 208.38, and pre-market we are at 210.20. Therefore, the 9-day exponential is going to be a support for us. And then I think that we have the next level of support somewhere around 207.14. With regard to Apple, I think their movie has done well, but their AI game is not yet clearly in picture for investors. We need to see some AI play from Apple, and that will give a lot of boost to the shares. Otherwise, we have seen majors in phone industry like Nokia and all who have faded away. At one point of time, they seem to be at the top of the game, and we had BlackBerry. So for iPhone and Apple to succeed, they have to increase their service revenue, and a good portion of future service revenue is likely to come from AI. We have to see more moves in AI from Apple. They seem to be running out of imagination. So you see a whole period of consolidation out here. So I think the trend is more sideways. Nothing much to report out here. Microsoft is down 0.20%, and it is still below this diagonal line of support that we have out here. And for today, the diagonal line of support is at 501.79. Pre-market, we are at 502.50. And the bearish divergence continues to prevail. And if you look at Tesla, miraculously, Tesla is up 0.99% in pre-market trade. Friends, if you recollect, yesterday also in pre-market, they were high, and then they came down during the day and ended the day down 0.65%. I'm expecting the same thing to happen right now, because there is going to be a whole lot of focus on what Elon Musk is doing, what his board is doing, what Dan Ives is asking for, and the America Party. And there are people like Mark Cuban and Anthony Scaramucci who are all interested in the America Party to disrupt the entire political process and bring some sanity and realign the American politics into the center-left and center-right area like it was before. So that all of that is going to weigh on Tesla. And of course, Trump will also react to it and expect a lot of regulatory problems for Tesla. If anything in the past is a record, something to go by. I would be a little bit worried as a Tesla stockholder. I am shorted on Tesla. I'm on TSLQ. So that is my personal disclosure. But I personally think that Tesla is in for a area of pain because even BYD and other Chinese vehicles are giving it a competition internationally. And so that's what I'm thinking about Tesla. Oracle is up 1.42%. Oracle is a silent giant, in my opinion. It's doing extremely well, just heads down, doing its work and not getting involved into the social, political, cultural issues, and getting into the AI bandwagon very silently. So I think it's all looking good for Oracle. A lot of golden crosses out here. Everything is looking great. Absolute bullish sentiment. MACD is absolutely bullish. Momentum is above average. RSI is overbought. But in the past, we have been all the way up to 87.22 on RSI scale. So more gains in store for Oracle, plumbing new heights, or I wouldn't say plumbing new heights, scaling new heights. That's what Oracle is doing. Absolutely amazing. AMD is up 2.10%, and it's presently at 141.33. And our minor line of support at 140.89 is the first level of support. Second level of support is the 9-day exponential at 137.20. And our resistance is going to be 143.66 for today. And we look at SMCI, which is up 0.68% in pre-market trades. 9-day exponential sitting at 48.02 is the support, and the resistance is going to be 50.34. However, in pre-market, we are already at 50.37. So I think that I'll have to plot a new resistance for us. And my new resistance out here is going to be here, and it's going to be at 55.85. That's going to be the new resistance for SMCI. And we have got Broadcom up 0.65%. 9-day exponential is the support at 271.19. And Palantir is down 0.04%, again riding this diagonal line of support and getting support from the 9-day and the 21-day exponential. So for today, the support is going to be 138.09, which is the 9-day exponential moving average. And our resistance is going to be a resistance which is happening to be at around, I would say that the resistance is going to be at 144.72 for Palantir. And we go to SMH, which is up 0.67%, again driven by AMD and NVDA. Our support for today is going to be pretty strong, and it's at 282.17. And we have Tempus AI, which is up 0.98% in pre-market trades, and we have resistance at 59.47, and we have support at 58.05. Pre-market, we are at 58.98, bang in between these two lines. And we have a death cross which has formed here. 9-day exponential has crossed over the 50-day. And we also have 9-day exponential crossing over the 21-day, forming two death crosses so far. So that's quite bearish. We have the bearish sentiment, bearish MACD, momentum below average. So Tempus AI is on its way down, in my opinion. So when the market closes, we could see a red number out here. That's my personal opinion again. So let's go on and have a look at Genomics before we wind up. Prime is up 2.20%, and we have support at 4.50, which is going to be performing the role of a support. In fact, I would probably move this up a little bit and say the support is at 4.54. Now, pre-market, we are at 4.64. Intelia is up 1.65%, and we have the 200-day exponential performing the role of a resistance at 12.30, and that has been broken in the pre-market with the price going to 12.33. This is a very strong recovery from Intelia. And we have RSI, which is overbought. So I would look forward to a little bit of consolidation out here as we fight the 200-day exponential. And then we look at Caribou Biosciences, and it is 2 days ago, we had a news report which says that Caribou Biosciences is paying a $3.9 million settlement to investors, and that's going to be hitting the bottom line. However, because certainty has come about, I think Caribou is gaining 2.86% in stock price. In pre-market trading, it's up 1.80%. You have seen 3 straight days of price gains. That's the premium for certainty. So the settlement amount is now capped at 3.9 million. So that gives investors clarity about the financial position of Caribou Biosciences. And that has helped the price to go above the 200-day exponential. And I think going forward from here, we should see a good deal of consolidation, because we have a RSI scale out here, which is somewhere in the region of around 78.26, and we are almost close to that. So expect some stabilization and building of a foundation out there, just like we saw with Verve, and then we will be able to move upwards. Beam Therapeutics is up 6.20%, and it's converted the 200-day exponential also into a support at 22.00 for today. $22 is the support for today. And we have golden crosses which have formed. 9-day has crossed over the 21-day, and 21-day is in the process of crossing over the 50-day exponential moving average. Sentiment is bullish, MACD is bullish, and momentum is almost overbought. But in the past, we have gone all the way up to 74.80 on the RSI scale. So I think that we should have a little bit more growth and then a little bit of consolidation for Beam Therapeutics. And we have Altimmune, which is down 13.08%. Again, this share continues to bother me. I have a little amount of Altimmune left with me, and that's still deep in the red. And I was hoping that we'll be moving upward, but we are going in the wrong direction. There is some federal lawsuit going on Regarding the phase 2B trials, and things are not looking that great for Altimmune at this point of time. Verve is up 0.27%. As I mentioned, friends, it's creating a stable foundation out here, and we're just waiting for the deal to go through. And nothing much to report out here. A very safe bet for large volume purchase and sale because the price moves within a particular range. Editas is up 1.30% in pre-market trades. The 9-day exponential has formed the ultimate golden cross by crossing over the 200-day exponential. So Editas is clearly in the bull channel, and we have RSI being touching around 86.21 in the past, and right now we are overbought, but we are just at 75.19. So in theory, it could go up a little more before consolidating, but there's been steady gain over a period of time. This is not a rapid gain. So things are looking pretty good. The last 4 or 5 days have seen exceptional gains. We had a minor bull flag, and that reached its fruition. And today we have a doji candle. Yesterday we had a doji candle indecision, and today we have opened slightly up. So I would think that today we may have a little bit of consolidation, a little bit of cooling off before we go up further ahead. I think we have a resistance out here that we have to pay heed to, and that resistance is going to be at 3.20. And that will perform the role of resistance for today. Illumina is up 0.11% in pre-market trades. 9-day exponential, which is sitting at around 97.37, is going to be the support. And we have a resistance, which is going to be 103.19. CRISPR Therapeutics is up another whooping 5.46%. Congratulations to everyone who is holding on to CRISPR Therapeutics. And we had a resistance on the RSI scale at 85.47. So today, I'm going to expect a lot of profit taking to happen, and as a result of which, we might probably see CRISPR Therapeutics consolidating or maybe even giving a little bit of ground. Now, I want to try something else also. Let us look at connecting these trend lines. So this could have been a resistance out here when we connect these trend lines, and it has broken above that. So there is even more support for the stock price. So I think for today, our support is going to be 59.16 for today. That will be our support. And let's go on to look at Allogene, which is up 0.83%, and the 21-day exponential, which is at 1.23, is going to be the resistance for today. Grail is up 0.05% in pre-market trades. PACV is up 2.70% in pre-market trade, and we have support at 1.45. This is a minor line of support. I don't know why I have marked it red, but the support is going to be at around 1.45. ARCG is up 1.69% in pre-market trades, and we have a support for ARCG, which is at 24.75, and Vertex continues to be a bit flat in pre-market trades, but I'm thinking that it's going to have a support today at 476.09, and it's going to continue moving upwards. The company has got a lot of revenue earning products. Sentiment is bullish, MACD is bullish. Momentum is almost overbought, but in the past we have gone all the way up to 75.94. So the choice for Vertex is to consolidate and build a new foundation or create a bull flag in an attempt to move upward. So those are the options that I'm seeing there. Ginkgo Bioworks is up 1.08%. 9-day exponential is going to be a support at 11.16. And the 200-day exponential at 11.85 will be the resistance. Pre-market, we are up 1.08% and sitting at 11.19. Unicure is up 0.87% in pre-market trades. IMTX is flat in pre-market trades. Precision is up 3.68% in the pre-market trades. And thanks to David Best for bringing this to my attention. Of course, I would blame David Best also for Altimmune, but it was my decision to buy it. Likewise, I bought a little bit of Precision. Again, my decision entirely, even though David Best might have bought into my attention. I looked at it and I've taken a decision to buy. I bought 1,000 of them yesterday at 1.92. Today it's at 1.97. Analysts are pegging a target of $6 for it. So I'm going to look carefully at Precision and try to dispose it off without being too greedy like I was with Altimmune. They have a BLA which is coming up in early August for approval from FDA. when anyone submits a BLA, there is a 83% chance that it's going to be approved. So the odds are stacked in favor of approval. That's the reason why I got into Precision at this point of time. I could have got in much earlier. We were following it, as you know, for months, for a month almost, but I didn't get in because the risk reward was a bit skewed in my opinion. And now with all the golden process out here, I'm feeling very emboldened to go in for it. I think the next resistance for it is around $2. If we break through $2, then the sky is the limit. I think $6 is the limit, I would say, because that's where we have JPM Securities pegging a target. So that, my friend, brings me to an end of today's live stream. I'm going to quickly have a look at what's happening in our chat section. Thanks for joining, my friend, and thanks for joining. Yes, Crisp is doing a Hulk Hogan kind of a thing, WWE parlance. And I think I'm going to end the session right now, and I'll catch up with you guys in the next